I do want to share a concept with you that is to try to help you to understand what we're doing here, and the rationale and the verbiage behind our program to help people basically to improve their credit. All right. Now, one of the things that we don't want, that we are not, is we're not a credit repair company. Matter of fact, we really need to adamantly let people know that this is not credit repair. Very important. Not a credit repair company. We are a credit reporting company. We have a credit card, basically. Now, there's a business model that has opened the door up for us to be able to do what we're doing. All right? And so, what I did is I looked at this company and looked at what they were doing and how they did it. And the fact that they were able to do this is, I realized that if we built a model similar to theirs, that we could indeed do the same thing that they're doing. And I'm going to bet you, matter of fact, not only can we do the same thing they're doing, we could actually do it better than what they're doing. And that's what all this is about. Every aspect of what we do as a company in our card, you can find these aspects with different cards. Okay, you want a metal card, you can find that with American Express. If you want, to rent a car, of course, any credit card will allow you to do that. And so, what the true beauty of what we've done is we've taken all of these pieces that normally would only be here on one product, but it wouldn't have this. It would be missing this, that, and the other. Or this product, but it's missing this part over here. We just took all of these things and put them all under one umbrella, is what we did to make our product. Well, the same thing goes with like the credit side and helping people to improve their credit. So listen very, very closely. The name of the company that opened the door to make this move possible is called Self-Lender. Okay? Self-Lender. I kind of kept this under my hat for a bit, so I was able to work out more of the details of it. Now, I want you to understand. All right, Self-Lender, what they do is they work with banks, directly with a bank. And so you will go to Self-Lender, fill out an application. They will then say, let's say $1,000. Or the highest amount they would do is $1,700. Okay? So $1,700 is the loan that they'll give you, $1,700. But here's what they're doing that makes it very interesting, is that they give you a $1,700 loan, but you don't get the money right away, okay? They take the money and they hold it in a CD. And then what you do is they charge you $150 a month. For 12 months, you make each monthly payment. They report that monthly payment to the credit bureau every month. If you miss a month, they will report you late, okay? And it will harm your credit, all right? But the moment that you have met the terms, where you have paid all of that money back over the term of that loan, then they take the money that was loaned to you, they say that it's matured, and then you get the money, okay? But what has happened is you've made monthly payments every month in order to be able to get that reported to the bureau, okay? Now, the bank is important in that situation because the bank had to make the loan, all right? Even though, technically, if you think about it, the money is not, it doesn't go to the person. It just sits there until the person makes that number of payments that it takes to equal that loan amount. And once that loan amount is equal, then the person gets all of the money. But along the way, again, every time they make a monthly payment, that is reported to the Bureau. Well, whoever came up with that is very smart, very ingenious. I mean, to come up with that concept. So we're doing the same thing. The difference is that instead of it being a loan, we're doing it with a credit card, okay? And we're saying to you that with the loan, they said to you, okay, the most that you can get is $1,700, and you pay $150 a month, okay? What we're saying to you is that with a credit card, we can do the same thing, but instead of it being us reporting the loan amount, we report the credit limit that we give you. Because here's what a credit limit is. We can, let's say Montgomery Ward or Sears or any company. You can apply for credit, and they make a decision as to what your credit limit is, okay? Some people have a $500 credit limit. Some people have a $5,000. Some people have a $10,000, $20,000 credit limit. That is decided by the institution. Okay, no one else decides that. It is decided by Montgomery Wards, their inner staffing, or whatever they have, will make a decision as to what your credit limit is with them. Okay, so as a company, a corporation, we have the ability with our card to give you a credit limit. Now, but the difference is that it's like self-lender, whereas you can't just go take the money and go use it. Just like self-lender, the credit limit is there. All right. Now you make monthly payments, okay, towards that credit limit. Just like you make with self-lender monthly payments towards that loan. Once your number of payments meets the criteria, they release the loan to you, we release the credit to you. Either, we can put it on your card or you can get it in cash. Doesn't matter. The moment that the terms meet, then that money is yours because you made that monthly payment every month. Now, if you want $1,700 and pay $150 a month, hey, that's what self-lender does. But if you want $5,000 and you want to pay $70 a month, the only way to get it up to $5,000 from $1,700 is either you have to, if you want to do it in a year, you have to pay a lot more monthly, okay? Or you have to pay, if you want to pay less than $150 a month or whatever, and the credit limit is higher, then you have to pay a lot longer, okay? So it's no in between. It's the same thing, except that instead of $1,700, which doesn't do a whole lot of good for a lot of people, $5,000, $10,000, and possibly even more may be available in the future, whereas the monthly payments that's associated with it can still remain low, but be spread out over a longer period of time. Now, there's no interest or anything on top of that or whatever. It's just simply a monthly payment that you make for X amount of time. And once the monthly payment that you're making equals the credit limit that we give you, we then in turn give you every cent of it back in the form of a loyalty bonus. Okay? And that loyalty bonus is only earned upon maturity. And pay it off early. You have to literally go through the number of months and make those payments over the months in order for that to happen. But the beauty of it, of course, is that you are building credit every time you make that payment. And in a sense, it's almost as though you have a built-in savings account for yourself that down the road you know that you're going to have access to $5,000, $2,500, $10,000, or whatever dollar amount that you set up for yourself. And so, essentially, to continue to keep going month after month, to build your credit. But some people may come in and make a decision, hey, I need instant boost for my credit, and they use us in order to get so. And then after a couple of months, they quit. And that's cool. They quit. And when they do so, all they're doing when they quit is we just close the account. Okay? No harm, no foul. No, nobody's mad, angry. We're not putting you in collections or anything like that. You just close the account. Just like with any other credit card. Basically you pay and close the account. But, because we never actually gave you the money, then you don't owe anything. Because you don't get the money until it matures. So you see the beauty of that. But once it matures, it's your money anyway, because you got to the point of maturity. So again, I just want everybody to understand that, and I'm putting it in writing so that people can understand the move. Because see, the way this world works is you can stand on the shoulders of others. Okay, it's much easier to do so than it is when you introduce an entirely new idea to people. You have to explain to them and help them to understand how did this idea come to be, you see. Because they just won't accept it, unless they understand the rationale behind it. Once it's understood, then it becomes, nobody cares anymore because it's just the way it is. But in the beginning, you have to make sure that people have an understanding of what's going on and what you're doing. Because if they don't understand, they have a category for stuff they don't understand. It's called scams and all kinds of names, that they're called stuff they don't understand. So it's important for us to understand it well enough, to where we can explain to people so that they can say, oh, okay, I see. Now I see what you're doing. Okay, now I see what you're doing. Because most people won't see it because they've never seen anything like it. They don't know about self-lender and how they broke ground in being able to create a situation where a person could make monthly payments towards a loan that they never took possession of the money, but have that monthly payment being reported to the Bureau every month. Like I said, whoever thought of that is the real genius. Okay, what I did is I just saw that and said, as a card company, we can do the same thing for cards, but instead of a limit of small amount, we can raise the limit to $5,000, $10,000. And of course, you have to pay longer on it, but who cares? If you do it, I have cards that I've been having for well over 10, 20 years. And I'll keep those cards for the rest of my life. So that's not unusual to have it, when you buy a car these days, typically people are paying for cars for 60 months, okay? But my point is simply that making a monthly payment or whatever and having that money, in a sense, get to a point of maturity where that payment matures and you get it all back, it's a very beautiful thing. It's a very powerful thing. And we can utilize that technique, the self-lender design. We can utilize that technique for credit cards that I'd be willing to bet you down the road there's going to be some other companies that's going to follow that because, it's such a, like I said, I'm a numbers guy, all right? And the numbers are beautiful. The benefits are tremendous benefits of being able to have a $10,000, $5,000, $10,000 primary account showing on your credit bureau, especially if you just try to rebuild and get started again. It's a very hard thing to do to get that amount of money, and certainly if you did, the only way to do it now is you'd have to have the whole $10,000 right now, today. Most people don't have it, okay? Or even if they did a loan or something, the payments would be, so much or what have you that, average person just couldn't do it. So it's just a way to stretch it out over time so that the payments remain low, back and forth $70 a month. But again, if you walk away at any point in time, you walk away from it because it has served its purpose to you, you got your dream home. You got the car that you wanted or whatever. Cool. Go ahead. No issues, no obligations. So that's really, I think, the beauty of something like this is that you are in complete control over your own money and your destiny and how you use your finances. All we're doing is we're just trying to give you a tool to help you to get to shortcuts, to get you where you're trying to get to. All right? We can't tell you where you're trying to go. We don't know where you're trying to go. But we do know that we have tools in place, and we're smart enough on our end to provide you with these services that, again, along the way, you can make some extra money. You can get a chance to win some beautiful rewards. You get the best card in the world that you can use. You can improve your credit. So when I talk about zBlackcard, it is not about one thing. And if all you talk about is the credit part, you are doing your customers a disservice. Okay? I cannot state that enough. You have to let people know that this is bigger than that. I mean, this is an opportunity, literally, to be a part of something amazing. It's like being a part of Microsoft and Facebook and Apple. Is so innovative that you can be a part of something like that before the masses know about it. It means that you can turn, literally change your life, your financial life forever. That's what's going on here. We just want to educate people and wake them up that there's a better way to go about this stuff. There's a better way to do it. And these kind of ideas, man, they don't come around often. They just don't. It's a very disruptive industry. It can change the whole thing. The way credit cards are even looked at and designed, I guarantee it'll be a whole nother industry down the road that look at what we're doing today and say, well, hey, we can do the same thing over here. But by the time they jump on board and they do that, whatever, who cares? Because we just want our percentage of the market, and we got a strong brand, and we're attracting people to it every day. The moment this stuff starts hitting these credit bureaus, everybody, you'll see what the number's going to do, okay? We're prepping for it right now. So, again, just wanted to give you guys that basic information so that we can make certain that we are presenting this in the right manner to help people understand how all this works. Because if they don't understand it, again, they got a place for that. They're going to call it whatever, all kinds of names, because they just don't understand. So this is not something that we invented. We didn't have to invent it. We had to recognize that it was there, and then create the correlation so that we can fit under this umbrella of procedures that are totally legal, totally 100% legal. Okay? So anyway, guys, Dean, if you want